Assalamualaikum warahmatullahi ta'ala wabarakatuh. Welcome back. In this video, I'm going to show you the accounting treatment for PPE in terms of derecognition. And in this video, we are going to cover derecognition of a revalued PPE. And what we mean by derecognition of revalued PPE here is that the PPE, it is first revalued either at a surplus or at a deficit, and then maybe after 1 year or after 2 years or maybe in the same year it is being derecognized or being disposed. So in your PowerPoint slides note, that is actually at slide 63, 64, 65, 66, and 67. So in your PowerPoint slide notes, you can refer in your notes, PowerPoint slide notes, slide 63 to 67. Okay, let's start. If you read the question, it is at part C. It is at part C of this past exam question that I have picked up for you. And this is question June 2018, question 1c. So let's read the question together. We'll have to go and check what are the important information. So you acquired an abandoned building, so meaning that that is the date of acquisition. It was acquired on 1st of July 2013. And on that date, the initial cost was 2.2 million. So 1st of July is the initial recognition date or the date of purchase, and the cost was 2.2. And then somewhere on 1st of January, which is beginning of the year 2015, that building that was acquired in 2013 was revised in terms of its fair value, and it was determined to be 1.8. So this 1.8 is actually the fair value, and that fair value is fair value on 1st of January 15, which is fair value on the beginning of the year. You need to go and make sure that when is the date, because sometimes it can also happen somewhere middle of the year, somewhere at the end of the year. And on that date, they revised the remaining useful life to be 12 years. So the RUL on that date is 5 years. If you compare with the RUL in 2013, it was 20 years. Okay, that was the part on revaluation. So we will draw a line in a short while, the time diagram, so that you can understand better. Next is on the derecognition. So the building was sold at a price of 1.7. So 1.7 is the disposal proceed on the date of disposal. The date of disposal is on somewhere at the end of 31st of December, meaning that it was disposed at the end of the 1st of December somewhere, which is also the date that you are asked to calculate the amount of gain or loss. So meaning that in that year, you need to check whether do you still provide the depreciation for the abandoned building. Why? Because it depends on whether it is monthly or yearly basis. So as you know, for monthly basis, you still provide depreciation of the disposed asset up to the date of disposal. So meaning to say that from 1st of January 16, in the year of disposal, this is the year of disposal, you will still provide depreciation. And after you have provided the depreciation, then only somewhere 31st of December it was being disposed. So throughout that year you have provided depreciation. Why? Because it is a monthly basis. So the year end of the company was 31st of December each year. So you're asked to calculate the surplus. So the surplus is the surplus that happened in the financial year 31st of December 2015. But the surplus happens here is the one that happened on 1st of January 2015. So for the year ending 2015. However, for the second part of the question, you are asked to calculate the gain or loss. So when you are to calculate gain or loss, this is because of the derecognition. It happened on 31st of December. And remember, on 31st of December, you need to look at what are the accounting treatment. So we're going to calculate surplus. We'll do this. We'll do also the calculation of gain or loss. I will also show you the workings to get this, as well as not only that, I'm going to show you the journal entry that relates to the workings to get surplus or deficit. And after that, I will give you some bonus answer, which is what is the effect in the movement of the PPE for building for 2 years. I'm going to show you the movement of building in the notes or the schedule to the PPE for 2015 as well as in 2016. So that is what is in the question. So let's look at how do we work out the answer. So I'm going to use my S note to show you how do we arrive or how do we work the answer. Okay, I'll use my favorite color, which is black. And where possible, I will also use other ink, which is blue. So for the first part, which is to start with, we will draw a line. So 1st of January 13, sorry, 1st of July. 1st of July 13, this is the date of acquisition. So this is the first year, second year. And this is 1st of January 2015. So this is where changes took place. And this is where you have your revaluation model. And this is where you have your building being acquired. And that was for 2.2 million. So meaning that this year you will provide depreciation, yeah, 1st of January 14, and another depreciation here, so for 2 years. So revaluation model, 1st of January 2015. And let's look at the second part. And what you need to do is you need to you are being informed that the fair value on this date was, if you look at the question, it was determined to be 1.8 million. So your duty is to find the surplus or deficit. Right, I will proceed with the following year. So if you look in the second part of the question, which is the one that about the disposal. Okay, It was being sold off on 31st of December 2016. So here is 31st of December 15, and this one is 31st of December 16. So this one is 31st of December 16. So this is where it is being disposed. So I put here disposal on this date. Here is revaluation. So it was disposed completely, and what you would see is that the basis for this company in terms of depreciation method, it's yearly. So it is actually straight line method, and in terms of basis, you are informed it's monthly basis. So if it's monthly basis for disposal, you still will provide depreciation in the year of disposal. You provide depreciation for the disposed asset. Of course, if you have more than one asset, you have several other assets, it will be still charged with depreciation. So what we are trying to say is that you're going to find out the depreciation here, and you also need to still provide depreciation in this year of disposal. So this is year of disposal. We call it year of disposal. I put here YOD. So this one is YOD, the one that I have already highlighted. Okay. So that is what happened. So let's start by looking at the working for the revaluation, and so that we can find the surplus or deficit, then only we'll be looking at disposal. So we're going to look at the revaluation model. And on 1st of January to July 2013, the cost, if you look in the question, was 2.2 million. And the revaluation took place on 1st of January. So you are given here on 1st of January 2015, the fair value is 1.8. So we want to see whether there is a surplus or a deficit. So we need to find what are the accumulated depreciation as on 31st of December 14, meaning that right before the revaluation date. All right. So that one, you're going to take 2.2 million. The estimated useful life was 20 years. So if you look in the question, 20 years. And from 1st of July, until 31st of December 14, this is actually 18 months. 18 months. So I will multiply with 18 divided by 12. So that will give your accumulated depreciation, and that is 0.165 million or 165,000. I'm rewriting it. again because there's no space just now. So on 1st of January 2015, your carrying amount would be 2.035 million or 2,335,000, sorry, million. So if you compare this, you will see that the surplus is not there. It's actually the case of a initial revaluation, and that gives you the deficit. And the deficit is going to be 235, or that one is 0.235 in terms of million. And this is the deficit that happened on 1st of January 15. So you can put the, so you are actually done with the requirement of the question. But as I said to you, I'm going to show you the journal entry. So for your information, you need to do some journal entry. So I'm going to label the part that you need to do journal entry. This is for the accumulated depreciation. This one, you need to do the journal entry for accumulated depreciation, this, and the journal entry for the deficit, as well as you need to also find what are the current year depreciation. Remember I told you that I'm going to prepare a movement of PPE schedule, right? So you need to calculate what are the current year depreciation in 2015. So if you want to know how much is the current year depreciation, we can do the calculation. It's not that difficult. You can do the calculation in a very simple way. So we'll be doing that. Okay, I'll do the journal entry just to show you. So I'm going to debit the accumulated depreciation, because when you revalue, you need to remove the accumulated depreciation of the revalued asset. Here is building. So all 165,000 are being revalued at the beginning of the year. So that happens on 1st of January. This happened on 1st of January 15. Another one is the revaluation deficit. So I put here initial revaluation. So you are going to debit the SOPL directly for the deficit. The reason is because this is the initial revaluation. So we debit here 235, and we will credit our building again 235. So in that year, if you were to calculate depreciation for building, right? The depreciation for building in 2015, it will be based on the fair value. So based on this value, so therefore it would be 1.8 million divided by the 12 years. 12 years is the RUL. The 1.8 million is your fair value. So take the fair value divided by RUL 1.8, and then you provide depreciation for the whole year. Why the whole year? 1st of January 15 up till 31st of December 15. So that one will give you 150,000 or 0.15 million. So you have another journal entry here. To record here debit depreciation for building, and then credit the accumulated depreciation for building with 150,000. You can copy down this. I think you have the time to do so. And that one, we are going to show the impact in the movement. For example, this one, I'm going to use a different color, as I said. I'm going to use purple. UITM di hatiku. So, debit accumulated depreciation. Debit. So, this one will have to be deducted in the accumulated depreciation part in your PPE note. Credit building. These are deducted in the cost section. So, this one will be deducted in the accumulated depreciation, but this one will be deducted in the cost. I put C for cost or valuation. This deficit. This deficit of 235 will be deducted at the cost or valuation section. And the depreciation for building, you have this one, right? The depreciation is debited to the SOPL, but the accumulated depreciation will be credited. So it will be credited, meaning that it will be added in the accumulated depreciation in the schedule. Okay, that one is the impact to the schedule that we will prepare later. Now we'll move on to our next part, which is our focus here is on derecognition. Derecognition of building. As I told you, it happens on 31st of December 16. Remember, it is again, let me remind you that it is monthly basis. This is very important because you are going to charge still depreciation, as I said, up to the disposal date. So meaning that there is still depreciation in the year of disposal. Okay. Now, since our asset is being revalued, this one, yeah, this is our focus. This 0.8 million will be the one that will be your figure to show at the beginning of the year. So now you have the cost or valuation, and our figure here is at valuation. At a valuation of 8 million. So that valuation figure is actually the one as at 1st of January 15. So you need to go and find what is the accumulated depreciation as at 1st of January 15. So what you will do now, sorry, not as at 1st of January 15, as at 31st of December 15. Why? Because that is the date of derecognition. So you need to find the depreciation on this date. So therefore, it will be from 1st of January 15, yeah, up till 31st of December 16. I'm sorry, the derecognition took place on 31st of December 16. Okay, 16. So that is for 2 years. So if you calculate, that would be again 1.8 million divided by RUL 12 times 2 years, right? And that one will give you 0.3 million. 0.3 million. And the carrying amount as at 31st of December 16 will be 1.5 million. Okay, I would like to highlight this part. In this 0.3 million, part of it is the accumulated depreciation. Part of it is the current year depreciation. So accumulated depreciation is from 1st of January 15 up till 31st of December 15. But since you use monthly basis, you still provide the depreciation for that year up till 31st of December 16. So this one, if you calculate, you will get 1.8 divided by 12 times 1. So it's 150,000, yeah, and for 1 year, right? And here also the same calculation, 1.8 million divided by 12 times 1. So it is 150,000 as well. So you need to I need to highlight that because that will give impact to the notes on PPE. So you will compare that with the disposal proceed. You are comparing the carrying amount with the proceed 1.7 million. And that will give you a gain. Actually, the information on gain or loss or the disposal proceed is not really the issue if you prepare movement of PPE. But in this question, the requirement is to calculate either gain or loss. So our gain is 0.2 million. So we are actually done with the calculation part. But since I'm going to show you the movement of PPE, I will also support this with a note to the account, as well as before that I'm going to show you the journal entry. We are trying to throw birds, a few birds with the same stone. Okay, so what are we going to do here? I'm going to use another different color here. So I use blue. So our journal entry would be for this. I put here number 1, the one that you need to eliminate. Our journal entry is also for the disposal proceed number 2. We also need to go and derecognize the asset here, since now it is at fair value. So that is the carrying amount, which is not the cost but the valuation. So this one, and also the current year. So the sorry, I'm focusing on this. So, and then again the gain on disposal, so number 4. So I will do first thing first, the accumulated depreciation. So debit accumulated depreciation. This is number 1. Just to show you which one relates to which, 0.3 million. The second one is the proceed. So when you receive proceed, you debit bank or debit cash, right? So that was 1.7 million. So that's number 2. Number 3 is that to record the gain. So I record the asset that is being disposed, so I will credit building, and our figure here is based on the amount shown in the PPE account, and that was 1.8 million. 1.8 million. Next is to record the gain on disposal. Okay, gain on disposal will be shown as part of other income, and that is a SOPL item. So the gain is 0.2 million. So this thing that I have worked out for you will help you to prepare the PPE note. So this one, for example, 0.3 is the one that you need to go and deduct. Yeah, 0.3. The one that you need to go and deduct in the accumulated depreciation. The one that you credit building is the one that you need to deduct 1.8, right? In your cost section. So cost minus. That is the two things that will affect your movement of PPE. We'll now move to the next page. I'm using my note here. So we are going to prepare notes for building, movement of building, right? And that one is for, as I promised earlier, it was for 2 years. So let's start. So this is the cost or the valuation. And I put here the years. We have 2 years here. One is 2015. Another one is 2016. And at this bottom part here, I have my accumulated depreciation section. Okay, let's start. At the beginning of the year, the balance brought down 1st of January 2015. So the figure given to you was the cost as at 1st of July 2013. And remember, there was a revaluation in 2015 on 1st of January. But before the revaluation, the cost is still being shown. So I put the cost, 2.2. Okay. And then there was this revaluation that took place. Remember our working earlier? Yeah? Revaluation here. Right? What happened is that there was a revaluation deficit. So I write here, revaluation deficit. Remember in the working just now, I've shown you that for the deficit, you need to go and remove from the building, as well as removing the accumulated depreciation. So we put here the deficit, and the deficit was 235. Next one is the elimination of accumulated depreciation. This one is the elimination that we did because of the revaluation model that has been applied. So if you look in the previous section, as at 31st of December 2014, the accumulated depreciation was 165,000. So that is the one that is also on 1st of January 2015. So I put here 165, and that needs to be removed because we debit accumulated depreciation. Right, that is the part on costs. Now we move on to the accumulated depreciation to find what are the balance brought down as at 1st of January 2015. If you can recall, that was the one that we had here as well, right? This one. So that 165 is also the one here, I put here. And this is for 2015, 2016. So 165, 1st of January. And the one that we debit here, 165, must be also shown the effect here, because we say debit accumulated depreciation, credit building. So the elimination of accumulated depreciation, elimination of accumulated depreciation are also being shown here, and that was 165,000. So as on 1st of January 2015, there are no more depreciation because balance was 165 and then you eliminate 165. However, you still need to charge the depreciation because it has been revalued. So you have to calculate the depreciation as I told you, and we have already calculated. And we're going to put here charge for the year. And our charge for the year that we have already calculated was 150,000. This one here. Okay. So 150,000. Therefore, we are done for the first year. And the balance here is 150,000. And the balance here would be 1.8 million. So this is the balance carried down 1st of January, 31st of December 2015. Okay, it is at the fair value, and the carrying amount, let me take my calculator, it is 1.8, you can do it together with me, minus 0.15. So it's 1.8 minus 0.15. So it would be 1.65 million, the carrying amount. And this is the carrying amount as at 31st of December. Okay, the figure that you have here will be the one that you will show here, right? Because it will be carried forward to the following year. The same thing here. This figure here, 150, is the one that you will show as the beginning balance in 2016. And remember, in 2016, there is a derecognition. And if you still can recall, for the derecognition part, there are a few workings that I've done with you for accumulated depreciation. The disposal give rise to a gain, and there is also some depreciation being charged in that year because of the monthly basis. So we have the derecognition. And remember, this derecognition is for this one. This one, yeah. The 1.8 for item that you have for your number 3. This one, right? So we'll be doing that. I put here derecognition 1.8. So meaning that at the end of the year, there are no more balance, right? Zero balance. Let's look for the second part of it, which is accumulated depreciation. So if you recall, the accumulated depreciation still has a balance of 1.5 just now, and I mentioned earlier that that one is related to this, where out of this 0.3, it is one for 2015, another one for 2016. The one for 2016 is this one, right? So we're going to take this and include in our workings here. So we put here charge for the year 150,000. That was the charge for the year. However, on 31st of December 2016, you have some derecognition. So this derecognition is the derecognition of the accumulated depreciation. Derecognition here is the derecognition of the costs that were being derecognized or being disposed. So that's the difference. So therefore, total was 300,000. And at the end of the year, the balance carried down as at 31st of December 2016 will be 0. And therefore, there are no more carrying amount in that year because it has been fully derecognized. Okay, that's it for our derecognition of PPE, which involve asset that has been revalued first, and it was revalued at a deficit, and later it was being disposed at a gain. And this is the movement of PPE. Okay, with that, I thank you for your attention. See me for the next video. Enjoy learning.